Are you wanting to start a limited company? Well, then this video is for you. As a business accountant, my team and I spend every day helping business owners make the transition into a limited company, and I thought that this would be a great video to share some experiences of some of the key things that you need to decide and be aware of when you start your company. One thing I recommend you do before watching this video is to make sure you go and watch our previous video that should be appearing about here at the minute, which talks to you about whether you should be a limited, because there are some pros and cons around limited companies. But presuming that you know that already and you're happy that you do want to be limited, let's get on and talk about it. Before we do talk about it, make sure if you like this video, just click the subscribe button below so you're notified whenever we release a new one. So before we dive into some specifics of exactly the things you need to be considering, what I wanted to talk to you about was getting the concept in your mind that this limited company is completely separate from you. So whilst you may be the owner, the shareholder, or the director, the person responsible for making sure this thing runs, you are still separate. And the reason that's so key to remember, especially from a tax point of view, is that the money the company is receiving or spending is the company's money. So any money you're taking as an individual, as that owner or director, it doesn't matter how you do it, in dividends or in salary or however you decide to do it, that money when you take it is not yours unless their paperwork is in place to say it's yours via those dividends, via those salary. And there's very specific things you need to do to make sure that that's okay. So just bear that in mind throughout your whole journey as a limited company owner, and that will do you very, very well. The other reason I mention this is because realistically, limited companies, what are they? Well, they are a separate legal entity. You know, realistically, they're a bit of paper at Companies House, but they form this thing which means that, let's say you get into trouble and the company goes down and it owes people money and all the rest of it. In general terms, and I am speaking generally here, you'll be able to make sure your assets are protected because your house, for example, isn't owned by the company in nearly all circumstances. If anything happened to the company, your house wouldn't be at risk. So there is a level of protection there, which I think is one of the key reasons that people like dealing with limited companies and having them there when you're in business. So it's a separate legal entity is the best way to phrase it, that sits aside from you, that operates in its own right as a business. So all that said, there are some key decisions to make. And one of the things I joke about a lot with clients when they come to see me is I said, right now, it's time to make the hardest decision. And that is, what are you going to call your limited company? And for a lot of people, they get confused about this and they spend a lot of time thinking about it. And there's a couple of things I wanted to mention on this. The first one is there are some things you can and can't say. So for example, there's restricted words. So calling yourself British this or British that, or using swear words or some punctuation. There's a list from Companies House, and I'll link it in the comments, that show you some of the things you can't do. So there is that. You should obviously do some Google searching and search Companies House to make sure there aren't already very, very similar names to what you want to call your company, or already the company, because if the company legally exists already, you won't be able to form that. And if it's too close, people could come to you and say, I need you to change your company name, please. We're already called that. So definitely worth doing your homework first and making sure that they're not a registered trademark or anything like that. I did see recently a customer where that company didn't exist, but there was a very, very close one that had a registered trademark that wrote and asked him to change it, or they were going to get him in a lot of trouble. So definitely worth doing your research on that point. But the other thing to remember is you can trade as something different. So if you think big companies with brand names, they might trade with a special brand and logo, but their legal company name is actually something that's not quite the same. So if you wanted to be Dan's Accountancy, you might call it, I don't know, D Holdings or something like that, and people do, they have these like more mundane names for their company and then trade as something else. But I think in an ideal world, it's quite nice, isn't it, to have your limited company reflect your trading name, but it's not essential. So I wouldn't stress too much about that if you then decide later to change your trading name or something like that. But that's there, making the decision about what to call it. Choosing your registered office. So registered office is different to your trading address. It's the place where Companies House can come and inspect your records, and is the one that goes on the public record. So the reason that is important is that you don't necessarily want your personal address on the public record, because marketing companies, disgruntled customers, anything like that can find your address with an easy Google search onto Companies House. I do it all the time with customers and potential clients. I say, oh, so you live at da-da-da, and they say, how do you know that? I said, well, you've registered it on Companies House. So it's not always that clear, but it will be on the public record. As a result, a lot of people use service office addresses or their accountant's address. That's very, very normal. So that's completely fine. You can do that. The only thing you can't do is it must be a physical address. So if you use a PO box address, you can do that, but you have to have the physical address in there as well. So it's just worth bearing in mind, but generally that's quite the done thing. But that is different to your trading address. So for example, if you were us, we would say to you, yeah, of course you can use our registered office address. We do a service for that. However, I wouldn't recommend sticking your business address whenever you have to list it on Google, for example, as your accountant's office or the or something like that, or a PO box style letterbox address, because when people go to search your company and that address comes up, and we've had it here, we've had clients, candidates turning up for interviews here because they've Googled it and they've seen the address is meant to be here. So definitely make sure that your actual trading address, if you're going to want people to come to your building, is in your marketing, is in your invoice and everything else. Your registered office does need to be on, say, legal paperwork like invoices, but it can be somewhere in small print, and that's quite normal. If you start looking for it, you'll see it everywhere, that kind of thing where it's just registered office at in small print. So the next thing to talk about is who's going to own the company, who's going to be the shareholders. Now, I've seen this from a few people, they're like, I'll sort that out later, it'll be me for now, but it's definitely worth considering at the beginning what that's going to look like. And as tax people, this is the exciting bit. How can we set the structure up at the beginning to save the most amount of tax, bearing in mind the directors and other people that are involved in this? So there's things like, you might have heard the term alphabet shares, where you can split the shareholding into different types of share, and that allows you to pay dividends differently on different share types. Now that's quite useful for making the most efficient use of the dividends and tax allowances that people and owners may have. So if you try and do that at a later date, you can incur problems with stamp duty, with income tax. There's other taxes and other law that's involved at a later date. So it's definitely worth spending some time at the beginning to consider that. But ultimately, you're going to have to choose an owner. And of course, with owners then comes directors. Now, it should be said, you can be a director and or a shareholder, or just one or the other. You don't have to. I think quite often people think you have to be both, but you could be just the owner of the company and have someone else run it. Or you could just run the company and somebody else owns it. Like there's lots of other ways of doing it, but generally in the small business world, the two tend to be one and the same, or at least both of them involved in some stage. So you have to then choose the directors. Now, the directors then have the legal responsibility for making sure that company runs and doing all the things it should do with its filing, which will be another video, I'm sure we'll talk about that, but with the actual things it needs to do. So it is a big responsibility. And in fact, when you get appointed, Companies House write to you and say, here's your responsibilities, so that you know. So whoever that is, just make sure they're very aware of it. And actually, in order to appoint someone director, you do have to enter quite a few details of theirs anyway. So you'll definitely need their willingness to accept that appointment. And of course, they should be 16 or over, which probably goes without saying, but it's worth mentioning. Once you've decided all that information, then you can then go and form the company. Now, this can be done in a few ways. You can form it direct with Companies House. There's a fee to do that. It's only a small fee. You can use a formation agent, or you can use an accountant who acts like a formation agent as well. Now, the pros and cons of those tend to be the agents, whether it be an accountant or a formation agent, are going to be more expensive than the Companies House formation. Now, you get something called a memorandum of association and some other standard articles which form part of the company's legal paperwork, and it really says how the company's governed. Now, regardless of how you do that, that paperwork's generally in place, and that's fine. So you get that. What you don't get with a Companies House formation is you don't get all the registers required. So you don't get meeting minutes of your first meeting during incorporation, appointment of directors, registers of addresses and who owns the shares, all these things that are meant to be there in case Companies House wants to inspect them. And actually, in a lot of lending scenarios, sometimes lenders will want to see those certificates, and legal people like solicitors and the like that may be involved in there will also want to see those documents. We get asked for certified copies all the time. So you definitely want to think about that if you've got any aspirations. Well, A, it's the legal requirement, but B, if you've got any aspirations of growing it and you might want funding or anything else at some other type, having those documents to hand is a really big deal. So, and that is where an agent, a formation agent or an accountant will be able to help you scoop all of that up, and also just make sure that you're registered for all the relevant taxes. Again, online you can register for corporation tax, which is the main tax that you need to do as a company, but there's other things like payroll, VAT and the like, and an accountant will be able to help you with registering those to make sure the dates align, because without getting too technical here, sometimes when that's not right, that can be a real pain later down the line to fix if the dates aren't correct, and can actually cost you money by having to, say, do a set of accounts earlier than needed or do an extra tax return that's not required. And then finally, this one's more a practical point, and that's getting a bank account. So we mentioned right at the top that this is a separate legal entity and a different legal thing. As a result, you need a company bank account that's in the company's name for nearly all circumstances to keep all this money going through and make sure you don't cause yourselves any tax problems. So go then, once you've got all this stuff, you get a certificate from Companies House, the certificate of incorporation, and that allows you to go to a bank and get registered. One practical point on that is they might ask you for a UTR or a tax identifier or something like that, and that's a 10-digit number that HM Revenue and Customs issue you once you're registered for corporation tax. That normally happens happens automatically but can take a little bit of time. Most banks understand that and will say, yeah, tell us later then. But if you do get that question, that's what it's about. And that's it. That's all the main things you need to consider when you're forming a limited company, whether you choose to do it yourself online with Companies House or have an agent do it. If you do need any help with this, of course we are here. Hit us up at the details below. We'd love to help you. If you found this video of use, please do share it with your networks, and we'll see you on the next one.